A brave new world has opened up in the world of finance. With technology acting as a disruptor to so many systems, there was no doubt that technology would shake up the way the world does business. The first known form of currency emerged nearly 5,000 years ago. Now, thousands of years later, we're taking currency online. And Nigeria has taken the first bold step in that direction on the continent. This week, Nigeria joined a small number of countries around the world by launching the e-Naira, a central bank digital currency. But Nigeria won't be the only African country with a Cbdc for long. Ghana, South Africa, and others are perfecting their versions of these online currencies. China, Sweden, the Bahamas, the Eastern Caribbean Currency Union, and the Marshall Islands are regarded as pioneers in the Cbdc space. A study by the Bank for International Settlements shows that 80% of worldwide central banks are engaged in Cbdc-related research. The percentage of central banks that run experiments or proofs of concept is also growing, reaching almost 50%. 10% of the surveyed central banks plan to introduce a generally available retail Cbdc in the next 3 years, and 20% in the next 6 years. There are a lot of questions around CbdCs and what value they can bring, what issues they can solve, and how they can transform Africa's financial systems. So let's dig into the rise of central bank digital currencies today. I'm Tolulokwe Adelaru Balogun. Welcome. This is Business Edge. Joining me now is Gospel Obele. He's the Chief Economist for Economics Limited. Gospel, thank you so much for joining us on Business Edge. Welcome back.
Thank you for having me.
So let's start with good morning. Let's start with sort of clearing a bit of confusion that we've seen between cryptocurrencies and CbdCs. There have been those who have basically been using the words and the terminology interchangeably, but they're not exactly the same thing. So let's start with that difference. What's the difference between a cryptocurrency and a CbdC?
All right, first and foremost, the CbdC is just to introduce an E aspect of the currency. So meaning that you can now engage into transactions seamlessly and some sort of building a full-blown ecosystem around virtual banking. So it's also expected that this would encourage interstate and inter-economic transactions over time and relieve the hassles of having to engage traditional banks in different climes at the same time or within different time zones. While the cryptocurrency is just some form of digital currency, all right, that is quote unquote yet to be understood about from the worldview, and a lot of countries are seeking to segmentize it as commodities. Some are looking at it as assets. Some institutions are accepting it as currencies in their own light of things. So it's just an alternative currency. Cryptocurrencies are to a large extent alternative currencies as against standard currencies that nations use to engage in business transactions. So a lot of businesses also use alternative currencies to transact, in the sense, but they are not regarded as a legal means of exchange, in as much as a lot of institutions have started using that as a means of exchange.
All right, so you've talked about the cryptocurrency being a type of currency that's also in business now, but ideally one of the attractive points about cryptocurrencies have been the fact that they are decentralized from the traditional financial system. But with the central bank digital currencies, they are going to be centralized, managed, and basically backed by a central body. In Nigeria's instance, by the Central Bank of Nigeria. There are those that say that this defeats the aims and the purposes of the digital currencies, or even the idea behind the decentralization of digital currencies. Where do you stand on this?
Well, I think it's a fundamentally good idea. I mean, like you said in the rollout of the program, that a lot of countries globally are spending more time trying to research, into how digital currencies work and then how to translate their home currency into that space. But I don't think that was the case significantly in this part of the world because it looked as though the central bank was trying to fill a gap for the cryptocurrency ban in February. So that's one of the body language and all that we see in this part of the world. But to a large extent, it's fundamentally a very good idea. The only concern is that before you can roll out the digital currency, you want to think of if you have the digital base, all right, to scale that idea or to roll out that initiative effectively. And in this context, that from the top of mind defeats the whole idea, because Nigeria doesn't have that digital economy landscape or strength or infrastructure to scale a digital currency operation in the sense.
Okay, and that probably might be the same issue for many other African countries, but we'll get to that later. So you talked about the countries adopting it and looking at it as a way to fill the gap. So let's talk about the numbers. From 35 countries exploring CBDCs in 2020, that's now 87 countries. 16 are now in the pilot stage with their own CBDCs and are preparing for a possible full launch. But we also have to think about the fact that there has been digital behavior with banks before now. Most of the money in circulation in commercial banks is held electronically. And according to a lot of reports, only about 4 to 5 or 6% of money in circulation is actually cash, banknotes, or coins. So we've sort of already been digital with the way the world is moving money around. So some have said that the rise of the CBDCs is more of a response to how liberalized and decentralized the cryptocurrency has been, how much of a threat it is to the financial traditional system of doing things. So let's get further into this. Why are banks moving to issue their own CBDCs? Are they threatened by cryptocurrencies? Is this about maintaining some kind of control over the financial systems? Is it about filling a gap, as you said? What do you think?
Yeah, so I agree. So there is a gap part of the conversation. There is also the seeking to fight against, the ripple effect of alternative currencies. The challenge with alternative currencies a lot of times is that people or many institutions globally, not just in the Nigerian case, haven't been able to tie exchange value, all right, significant exchange value to alternative currencies. All right, when you talk about Bitcoin and the likes. And secondly, alternative currencies are proving to be more volatile, all right, in recent times. And that has been because we've seen over time that alternative currencies have not been constant in terms of how market forces have interplayed and where they stand in exchange rates and transaction-wise. So there's that argument of volatility. And I understand the fact that the central banks in any country, they want to be able to control. There's also a concern around capital inflows, illicit capital inflows. I mean, Nigeria was doing as high as $200 million per week during the pandemic on crypto markets transactions and all that. And that's quite a cause of concern, for a nation that already has structural issues and all that. And it poses some national risk as well. So yes, I agree that central banks may be seeming to be able to control that market, but I don't think the approach should seek to control in a sense, because alternative currencies are here to stay. All right, the drive should be seeking to understand enough to be able to align monetary expectations, regulations, and policies to deliver in that light. Secondly, the e-Naira in this case has also been positioned, all right, as a competitive initiative. All right, when you look at it from commercial banks introducing their own virtual cards, virtual transaction identifying that case. All right, and that doesn't seem so much of a good communication when it comes to monetary systems development. So more collaborations have to come into the space. I don't think the central bank really understands the magnitude of this initiative enough. There are fundamental and structural issues that threaten financial inclusion that the e-Naira will not solve. So the way the e-Naira is currently positioned, it's such that it further empowers and enables the currently banked population, all right, and it further disenables the underbanked or the underserved. All right, so until there are structural digital, until there are digital infrastructures in place, onboarding a critical set of the economically vulnerable, we may not be able to leverage e-Naira, all right, for the underbanked and the underserved. So there are bigger questions than just seeking to control or manage an alternative market they have not even sought to understand yet.
And it's interesting you list these issues, because I wanted us to get to the challenges later, but it's good we're bringing that up now, because we know that the CBDC is backed on internet penetration, tech savviness. These are issues, and these are the way that you will get adoption. It will only be as useful and successful as the adoption and the usage from the population. So when you bring this up, what other possible challenges can we see the CBDCs running into, particularly on the continent? There are also questions around the privacy issues. When you're using a central bank digital currency, you're financial transactions, your banking transactions as it may be, using that are no longer as private as just taking out cash and deciding to purchase something from a vendor or from anyone. So what other challenges do you think we might run into? Because this being Africa's first full CBDC, there's a lot of countries that will be looking at Nigeria to see how we address the issues that come up in the next few months and the next few years with the e-Naira launching.
Yeah, so I mean, it's from the top of mind a good way to go, but it looks as though the central bank is in a hurry, all right, to counter the concerns on the cryptocurrency ban and the current forex challenges. Let me also state clearly that this e-Naira does not improve the value or the productivity base of the economy, sort of. So it doesn't improve the value of the Naira. So that's also to state that e-Naira or not, there are fundamental monetary system leakages that are currently, all right, happening right now in the Nigerian economy. And those things have served as incentives, all right, for people to adopt alternative currencies, and as well as the rise in capital illicit inflows in that space as well. So the central bank hasn't dealt with the current leakages in the system. It's just another latch or another layer of policy that may turn out to be, if not self-destructive, all right, in the midterm and all of that. So there are concerns in that space. So secondly, also to state that there are also concerns around the FX market supply dynamics. So the e-Naira doesn't really solve that problem in a sense. Just to put out there that it looks as though it's an initiative the central bank is seeking to deploy, as an alter ego from failed monetary policy systems or failed monetary policies that it is rolled out in the past. But fundamentally, it's a good idea. But there are rising conversations as to the onboarding. A lot of people I know have opened e-wallets on the e-Naira platforms, and they are yet to get their confirmation from the central bank. So the apex institution is not designed to engage mass market transactions in that light. In as much as I understand there is need for controls and the need for tracking transactions and all. Also to state that the commercial banks have traditionally they have what we call Kyc concerns. All right, know your customer concerns. So customer data is incomplete. You can't even track what is going on in a particular place because you don't have the right information. That's going to be a major issue for the e-Naira rollout. All right, so we need to solve the structural issues around KYC in the first place, around digital enablement, around rolling out digital inclusion. In fact, there is no way in the policy that the central bank notes that that the institution seeks to work closely with the Ministry of Digital Communications and all of that, all right, to roll out a more comprehensive digital plan for the economy where the digital currency can be more effective, in terms of sustainability of the initiative and all that. So it's thinking about the problem in part as well as holistically in how we roll out this initiative. And that's why I said a lot of Nigerians may not be interested to on board.
Okay, so Gospel, we're going to get into what the good potential for this is. As you've said, there are a number of structural issues, and those issues have been there with the traditional financial system. But this is an opportunity to set up something different, to set up something that addresses some of those issues. So when we come back, we'll look at what potential CBDCs hold for our populations. We'll also look at what President Muhammadu Buhari of Nigeria said. He said that the e-Naira can help boost the country's GDP and help reduce inflation. Is it something that it can do? And before we wrap things up, we'll also be looking at how the financial systems globally are addressing the rise of the CBDC. That's the central bank digital currency. The conversation continues on the other side of this quick timeout. Stay with us. Still with me is Gospel Obele, the chief economist for Streetnomics Limited, and we're looking at the rise of central bank digital currency. So we've pointed out issues which are not just issues for Nigeria, but they're issues, structural issues across board for any country that wants to bring on board a CBDC. And of course, internet penetration, tech savviness of your population is going to play into that. So Gospel, now let's talk about what positives these things hold. What are CBDCs CBDCs good for? What potential do they hold? Nigeria is the first. We've launched the e-Naira. Ghana and South Africa are working on projects. South Africa is even working on a project for international payment systems. So they're not just doing in-country. They're working with Malaysia and some other Asian countries. So particularly for Africa, what potential do CBDCs hold for our populations?
All right, thank you. So if implemented correctly and strategically nuanced, according to context as well, if we realize that it holds a huge potential to help central banks drive financial inclusion faster than the conventional model, that they used to run and all that. So that onboarding would go a long way to help a lot more Nigerians and Africans begin to interact with mobile and all that. But if it's also dependent on the structure, the digital infrastructure made available. So that's one bit. Secondly, truly and truly, according to what Mr. President said, that it has potential to grow GDP and all that. And that's because if, again, rolled out effectively, we expect more transactions and ease of goods and services payments and all of that across digital platforms, all right, which would also simplify the ease of engagement conventionally as well. All right, it will reduce the bottlenecks and all those other challenges that you have, in terms of moving and paying for goods and services conventionally. So all of that will now be done digitally, knowing fully well that all of the desks concerned in enabling for payments are properly plugged in and synchronized on the e-Naira platform. But then the conversation on GDP is that it will increase economic activities, payments, and all of that online. All right, Nigerians will be able to transact and make transactions across board easier than ever before. But the only challenge right there is that how do you synchronize all of those data and that information into the current GDP methodology and structure? So the current Nigerian GDP methodology and structure does not accommodate for e-transactions, digital payments, and even digital services as a whole. All right, so some form of methodological upgrade has to come into play on the GDP design, GDP reporting, and GDP structure for us to be able to clearly tell, all right, the impact of the e-Naira initiative on the GDP of the country. All right, from the top of mind central bank data, you can tell the amount of money and activities ongoing in the digital space. But how do you plug that into the GDP fabric, all right, to be able to tell the results clearly from an economic angle? That's another big question that needs to be solved on the other side of the equation. One of the other benefits is that I think it would generally impact on economic growth and development, because you'll now have a lot of people onboarding digitally, all right? It will increase tech awareness, digital awareness, internet awareness, and transaction awareness. And on that level, you can put any other thing else on that. I mean, more businesses will rise from that, deploying their plugins and all that to the e-Naira. And that's also provided that you have all the commercial banks properly in sync, even with their currently existing digital products as well. So it's a lot of alignment work and internal processing that needs to be done to get it to that stage. But those are the short-term potentials in a sense.
So I heard a lot of ifs, and I heard a lot of work to be done. I also want to take up one more thing the president said, that this also has the potential to help fight inflation. How could that happen? How can that be?
So my challenge with that statement is that it shows clearly that the fiscal authorities are still thinking of inflation from, quote unquote, the amount of money is available in the system or the amount of money is in circulation. All right. So just think about it from a cashless economy. And in that light, the president is right in a sense. Okay. So if you roll out an e-Naira initiative, there'll be less, in quotes, less cash available to move around and all that. And that's just a basic primary understanding of inflation. But the Nigerian inflationary story or Nigerian inflationary case is not birthed from rise of money in the circulation. All right. Nigerian inflation over time has been structurally driven and has been cost push than having so much money in circulation. So meaning that there are structural enablers that are increasing the cost of doing business or the transactionary cost of doing business over time. And that cost is pushed on the final consumer. So e-Naira or not, the average Nigerian will keep paying for more, or the average Nigerian will keep getting poorer on a month-to-month basis because disposable incomes are shrinking, and that's because cost of living is shrinking. So I have to pay much more amount of money than I paid last month for a particular item of goods and services. And even if I'm paying that online, it still doesn't change the fact that I'm paying more. All right? It does not necessarily mean that a lot more monies are outside. So there are two different cases. All right? Inflationary pressure now on the economy is more cost push than having a lot of monies in circulation, where you talk about broad money supply and all that. So the president may have been right on the necessary, in quotes, conditions, but on the sufficient conditions of what is driving inflation right now in the country, it's with all due respect, a wrong assertion to make. The e-naira would not, all right, increase or improve rather the inflationary situation in the country. It will not, because it's structurally driven and it's cost push driven, not monies in circulation driven, as it were.
All right. So finally, we see with all the changes, the structural amendments that need to be made, the regulatory issues as well, the drive for the digital aspect, that CBDCs would fundamentally alter the way financial systems operate. Right now, these systems are based on individuals depositing money in a commercial bank, who then creates more money by lending that money out in deposits. And then you have the central bank involved with interest rates and things like that. But in the long run, there are those who worry that CBDCs could actually destroy monetary policy as we know it. Where do you stand on that?
So just to add on some of the pluses or the benefits is the fact that you have a lot of interest and payment charges, off the radar compared to your USSD banking and all that. But where a lot of experts come in terms of your question now, speaking to the question, is the fact that the way and manner in which the CBDC policy in Naira right now has been rolled out in Nigeria, the language has been presented to be more monopolistic, all right, more seeking to be in autocratic sort of control, all right, and you cannot control financial transactions because, all right, they are people driven, they are mass market driven, they are technological driven, they are transaction. A lot of dynamics, market demand and supply forces are rejigging or informing that space. So you can't really seek to control it. So what the worry there is for monetary policy development will be that the central bank is not taking the time out, all right, to understand first, then design to synchronize along with how the market is evolving. And that's very critical. And one of the concerns on the table is that a lot of banks have introduced virtual cards and virtual means of transactions. They didn't term it e-naira, but they only introduced alternative virtual means of transacting. So what the e-naira does is that it's seemingly conflicting to many digital products, rollouts, and initiatives of many banks. So a lot of banks are now in a position where they have to probably drop down on some of the things they're rolling out on, or they seem confused in that space. So there's a lot of internal alignments that needs to be done. Okay. There's a lot of presenting the e-naira as not a control mechanism, but rather, all right, as an enabler or as a complementary enabler to other digital products and services that are being rolled out by commercial banks. You also have the question of fintechs, all right? Central banks need to collaborate more with fintech to roll this effectively. Sorry for taking your time.
I feel like you're about to take us to another gear on this, but of course the conversations cannot be over. It's just less than a week into the launch. We've seen some of the things that have happened. Again, as you asked, some people have not been credited with their wallets, but it's the beginning and it's the first on the continent. There are going to be a lot of lessons learned from Nigeria's e-naira project as well. But we'll be touching base as more issues come to the fore. Gospel, thank you so much for joining me.
Thank you for having me as well. I appreciate the time. Good morning.
And there's a lot to talk about. This is just the beginning as we watch Africa's largest economy launch its own central bank digital currency. And given the considerable efforts and attention that central banks are dedicating to CBDCs, they will become more of a widespread reality soon. Introducing this to the world will help boost crypto adoption as people will have access to the platforms to convert cryptocurrencies into legal tenders. But there's a lot of questions, and we'll be looking forward to answering those questions right here on Business Edge. Up next is NC4 to watch. And a few stories to ensure that you're not under a rock when talking about the biggest business stories from here on the continent and abroad. And we start with Facebook is rebranding and now has changed the name of its holding company to Meta Platforms Incorporated. The name change is the most definitive signal so far of the company's intention to stake its future on a new computing platform, the metaverse, which is an idea born in the imagination of sci-fi novelists. Moving on now, Zimbabwe's central bank has raised its benchmark interest rate to 60% from 40% as it attempts to stabilize a free falling of its currency and rein in surging inflation. Now, the decision comes 17 days after the bank hinted it would implement a plan to curb speculative borrowing that has fueled a decline in the value of the Zimbabwe dollar. South Africa's cement imports increased by 51% to 749,671 tons, with a free on-board value of 445 million rand in the first 8 months of this year compared to the same period in 2020. However, cement imports during the 8-month period were also 3% higher than the same pre-COVID-19 period in 2019. And finally, the Monetary Policy Committee of the Central Bank of Egypt has decided to maintain the current overnight deposit rate, overnight lending rates, and the rates of the main operation unchanged at 8.25%, 9.25%, and 8.75% respectively. The discount rate is also staying at 8.75%. And that's it. A week of conversations around the biggest business, economic, and financial stories coming out of the continent happening right here on Business Edge. Don't forget to join us 11 a.m. Monday through Friday right here on News Central for all those economic stories. Follow us on social media, download our mobile app, and of course, keep up to us on YouTube and all the platforms we are live on. I'm Tolu Lokpe Adeleru Balogun. Have a fantastic weekend. I'll see you Monday.